Assalamu alaikum and welcome to KSA Rising, your go-to source for the latest news and updates on the world of KSA real estate. I'm Kursat Osman, an indirect tax expert based in the Kingdom with a particular enthusiasm for all things real estate related, not just tax. So whether you're a seasoned investor, a first-time home buyer, or just someone who shares my passion for real estate, this is the channel for you. Today we're going to talk about the construction industry and related growth figures, the Riyadh housing shortage, we're going to talk about REITs or real estate investment trusts, and we again have a NEOM update and some info about the enigmatic rig development. So stay tuned. We kick things off this week with some impressive numbers coming in from Saudi Arabia's construction industry. Latest statistics published a few days ago showed that the Saudi construction industry powered through 2023, boasting a robust 4.5% growth in real terms. According to the latest data from the General Authority of Statistics, in Q2 of last year, the industry grew by 4% year on year. That's following an impressive year-on-year growth rate of 5.5% in Q1 of 2023 and 4.8% in Q4 of 2022. Looking ahead, the Saudi construction industry is projected to have a strong showing too. Between 2024 and 2027, we're looking at an average annual growth rate of 5% in real terms. When I say real terms, that just means adjusted for inflation. So the nominal rate, the non-adjusted rate that gets all the newspaper headlines is likely to be even higher. Regardless of how you slice it, that's no small feat. And as you know, I like to compare to the UK because that's where I'm from. And in the UK, the construction industry is set to shrink by 2.8% in real terms in 2024. But you do have to keep in mind that the UK inflation rate is still fairly high at about 4%. So it has a higher hurdle to jump before getting into real growth. It's no surprise that the KSA is seeing so much growth with all the investments and the mega projects under the Saudi Vision 2030 framework. After all, the KSA has a deadline to keep. It is telling that every week that I make a video, there is a large-scale development in the news. And we're talking like thousands of units, not small-scale developments. We're talking big developments. It will start to look like news when we stop seeing those new developments pop up on such a frequent basis. So there you have it. Saudi Arabia's construction industry is not just building, it's booming. It sounds like a really good time to start a real estate podcast, if you ask me. As we all know from previous videos, it's turning into silly season for Riyadh rents. The housing situation in Riyadh has reached boiling point and is back in the news, with rents soaring by a staggering 23% in some neighborhoods. The Saudi capital is in the grip of a housing shortage, and the numbers are telling quite a story. Demand for apartments is outpacing the market supply, resulting in a jaw-dropping 23% surge in rental prices in some places, and there's no sign that it's about to let up. Why the crunch? Well, the population in Riyadh is on the rise, shooting up by 5.1% in 2022 alone. Now, with the regional headquarters mandate, the RHQ mandate in full swing, experts are predicting an even more substantial surge in population, putting additional strain on an already tight housing market. Experts are warning that the undersupply issue is likely to get worse before it gets better. This crunch is hitting incoming residents hard, especially those relocating with their employers due to the RHQ program. The situation is also raising concerns about the Saudi Vision 2030 housing goals. According to the head of Savills KSA, Ramzi Darwish, the rapid population growth hasn't been matched by a simultaneous growth in residential stock. This has led to rising occupancy rates and a supply shortfall, impacting housing for expats. Yes, Expats, in particular, are feeling the squeeze. Riyadh remains significantly undersupplied in terms of accommodation options. As Mansour Ahmed from Colliers notes, expats are facing challenges in finding suitable housing that meets their needs and budgets. Now, here's a closer look at the numbers. Rents for apartments rose by 13% on average last year compared to 10% for villas. Central districts and major office hubs like KAFD in northern Riyadh saw some of the steepest increases. Affordability, which we touched on, I think it was last week, is also becoming a serious issue, especially for middle-income families and single workers. Ahmed from Colliers notes that there is a real shortage of options priced between 16,000 riyals and 20,000 riyals per month, a range that ostensibly is in high demand. Regulations limiting certain neighbourhoods to families pose another problem, particularly for single male expats. There's a rising demand for single male housing, but regulations and restrictions are making it challenging. Government initiatives like Sakani aim to support Saudis, but progress is gradual. According to Rayyan Al-Jrafi, a research analyst at Savills KSA, private developers are stepping up, but affordability and availability remain hurdles. Despite the challenges, the surge in expat demand is attracting investment into expat-focused projects. The market is evolving, promising long-term growth, but it's taking time to translate into increased supply. Non-local buyers are paying attention, drawn by the kingdom's strategic development plans and those rising rental rates. The CEO of the Real Estate General Authority, or REGA, notes that regulations for non-Saudis to own properties across the country are under review, opening up possibilities for increased foreign investment. This week, I also wanted to cover REITs, or real estate investment trusts, as we have seen a few results get published over the past couple of weeks. But before we talk about recent REIT performance, let's quickly go over the basics on REITs, what they are and why people often choose them over direct ownership of real estate. Real Estate Investment Trusts, or REITs, R-E-I-T-S, REITs were introduced in the US in the 60s with the aim of making real estate investment accessible to average investors. They were designed to reduce the risks associated with real estate investment and to lower the capital requirement barriers. Today, REITs are widely used across various countries and form an integral part of many diversified investment portfolios. REITs can be traded on major stock exchanges and are primarily income-focused instruments. They are mandated to distribute the majority of their profits to investors. REITs typically generate revenue through renting out properties they own, which can range from residential buildings to retail spaces, office complexes, industrial properties, and other less conventional real estate. Why would an investor choose a REIT over direct ownership of real estate? Well, REITs offer several benefits. They are professionally managed, requiring no operational effort from the investor. If you already own real estate, as an investment and take a hands-on approach, then you already know how much effort it can be to manage the property, to look after tenants, to deal with those void periods when it's sitting empty, and 100 other things. And what we tend to see is that list of things that you have to do as a landlord only gets longer and longer as we need to factor in more health and safety considerations or environmental considerations, for example. REITs provide diversification across different types of real estate assets and geographical areas. Instead of purchasing a single property in one location, a REIT fund will be more diversified, covering a number of properties, potentially over a wider region. Being well diversified means that you are going to be more resilient to challenges. If you directly own, let's say you own the one single property and something goes wrong with that property, let's say, for example, there's some subsidence or some other structural problem to the building, or maybe that particular part of town becomes really unpopular and nobody wants to live there anymore, your exposure is going to be significant. You could end up losing a lot of money trying to fix the issue or to sell the property. However, if you own units in a REIT, then you effectively own a small piece of a number of different properties, which means you are better able to deal with those sorts of shocks and challenges when they come along. They offer liquidity, allowing easy trading compared to the lengthy process of real estate transactions. Selling a REIT is much easier than selling a property. Think about all the paperwork involved in directly selling real estate, all the surveys that need to get done and the marketing that needs to be done and the viewings, the strategically placed Union Jack cushions for the photos or the live, laugh, love sign that you want to hang in the kitchen. None of that when you want to sell a REIT. It is, comparatively speaking, a much more straightforward process. Lower capital requirement barriers for people wanting to get into real estate. If you are a first-time buyer, you know how challenging it is to save for a home loan deposit. As the price of real estate seems to increase every year, getting that deposit saved can continuously feel like it's out of reach. With a REIT, there is a much lower barrier to becoming an investor, as they are bought and sold in a similar way to other stocks and shares. REITs offer a much more hands-off approach to having real estate investments, and you can still earn a regular income from it as you would with rents, and the value of the REITs should broadly correlate with the value of the underlying real estate. In other words, over the longer term, if the value of the property is heading upwards, then the value of the REIT should also increase. It's capital appreciation and a regular income. REITs have simplified the process of investing in real estate, making it more accessible and less risky for the average investor. They offer a more beginner-friendly approach to real estate investment compared to direct property ownership. However, as with any investment, it's essential to consider REITs in light of your unique financial circumstances and investment objectives. Do keep in mind that this is not in any way investment advice, and you should always do your own homework. Looking at the H2 2023 earnings performance of some REITs, the Alinma Hospitality REIT, which focuses on the hotel sector, especially in Riyadh, distributed 3.2% cash dividends to its investors recently. That's for 6 months. So it extrapolates to a potential roughly 6.4% for the year, which is quite a good result in my book. The Alinma Retail REIT, so this is a different one, not the hospitality one, the Retail REIT, didn't do as well with a half-yearly cash dividend of 1.7%, so 3.4% if we do a simple extrapolation for the whole year. And its portfolio seems to be more spread across the KSA, with shopping malls in Dawadimi, Tabuk, and Hafar al-Batin, as well as Riyadh. The fund did recently announce, this is the Retail REIT, it did recently announce that it would purchase an office building in Riyadh specifically. And I wonder if having a more Riyadh-focused portfolio will help improve its performance and eventual payout, especially as we're seeing these office rents, which we talked about before, these office rents and real estate more broadly doing really well in Riyadh. As mentioned earlier, you also have to consider the capital appreciation of the REIT too. It's not just about the cash dividends, but it's how much you'll get back when you sell those units. Over the last 6 months, the Alinma Retail REIT has dropped in value by about 6.3%. That's over 6 months. Whereas the Riyadh-focused hospitality fund has increased by about 1.8%. WeBuild, a globally renowned Italian construction company, has secured a contract worth approximately $4.7 billion to construct 3 dams in NEOM. The 3 dams are integral to the formation of a 2.8 kilometer long freshwater lake in Trojena, which will be the centerpiece of the Trojena project and will be the largest of its kind in Saudi Arabia. It's designed not just as a body of water, but as an ecological and recreational hub, complete with an island for botanical research and leisure activities. A pivotal and visually striking element of this project is the bow, an architectural innovation earmarked to be a luxury hotel that extends over the mountain valley. This structure is expected to be a blend of modern architecture and natural beauty. Pietro Salini, CEO of WeBuild, expressed immense pride in participating in this landmark project. He emphasised that the project's significance as an emblem of international engineering and construction excellence. Philip Gullett, Executive Director at Trojena, highlighted the project's sustainable approach, utilising excavated materials for construction purposes, thereby reducing environmental impact. The formation of the freshwater lake is integral to the ski resort planned in the area and should be ready before the 2029 Asian Winter Games. Trojena is a critical component of Saudi Arabia's Vision 2030, an initiative aimed at diversifying, as you all know, the kingdom's economy and reducing its reliance on oil. This project symbolises a strategic pivot towards innovative infrastructure and sustainable development. As per usual, there is some stunning imagery accompanying the story, so do have a look if you are a NEOM fan. In the fast evolving landscape of Saudi Arabian hospitality, a new feature is set to redefine adventure tourism. The RIG, a project by the Public Investment Fund subsidiary Oil Park Development Company, is an ambitious and groundbreaking venture in the Arabian Gulf that promises to be a game changer in the sector. At the heart of the RIG is an innovative master plan that utilises over 300,000 square metres of space, 40 kilometres off the coastline near Al Juraid Island and the Berri oil field. This project draws inspiration from offshore oil platforms and is a nod to the kingdom's rich oil and gas heritage. With 3 hotels offering a total of 800 rooms and 11 restaurants, the RIG is poised to attract more than 900,000 visitors annually, by 2032. The RIG is set to become an important cornerstone of Saudi Arabia's tourism sector by offering a range of activities, including extreme sports like bungee jumping, base jumping, and a range of water activities. It targets a broad audience from adrenaline seekers to families looking for something just a little bit different. This innovative project is expected to significantly boost tourism, drawing a mix of domestic, regional, and international visitors. The anticipated 900,000 plus visitors annually will not only contribute to the kingdom's tourism revenue, but also enhance the global image of Saudi Arabia as a premier tourist destination. The introduction of the RIG is also expected to create ripples in the real estate market of the surrounding areas by offering a unique blend of adventure, leisure, and hospitality. It is likely to elevate the attractiveness of the region, making it a coveted destination for investors and tourists alike. This increase in interest is anticipated to boost property values and spur new development opportunities, making it an exciting time for stakeholders in the region. Sticking with the tourism and travel theme, Saudi Arabia is taking bold steps in transforming its aviation sector with, amongst other things, the expansion of Aba International Airport. This project is part of the kingdom's broader vision to revolutionise travel and tourism, aligning with the goals of, again, Vision 2030. Aba International Airport, located in the southwestern province of Asir, is undergoing a significant expansion. The first phase, expected to complete by 2028, will see the airport's terminal area grow from 10,500 square metres to a huge 65,000 square metres. The expansion aims to increase the airport's capacity to over 13 million passengers annually, up from the current 1.5 million, so that's a huge jump. It will also enhance the airport's ability to handle over 90,000 flights per year, a substantial increase from its current capacity of 30,000 flights per year. The design includes 20 gates, 41 check-in counters, 7 self-service check-in desks, along with additional passenger boarding bridges, self-service facilities and expanded parking. The new terminal design, won by Foster & Partners in an international competition, draws inspiration from the nearby village of Rijal Al Mar. The unique modular design features buildings of varying heights and tapered shapes, some really interesting designs going on, reflecting the region's architectural character and local materials. The project emphasizes traditional Assyri details and terraced landscaping, offering a unique gateway to the Asir region. The expansion of Aba International Airport demonstrates Saudi Arabia's commitment to enhancing its aviation infrastructure and boosting its tourism sector. With its innovative design and increased capacity, the airport is poised to become a vital link in the kingdom's growing travel network, contributing significantly to the economic and cultural growth envisioned for Vision 2030. Finally, Saudi Arabia's sports and entertainment landscape is set for a major boost with the construction of the Prince Mohammed bin Salman Stadium at Qiddiya, southwest of Riyadh. It's no surprise that this ambitious project is part of the kingdom's broader Vision 2030 goals. The Prince Mohammed bin Salman Stadium, designed by the renowned architects Populous, will be a state-of-the-art multifunctional venue set atop the stunning 200-metre-high Tuwaiq cliff near Riyadh. The stadium is poised to become a global icon in sports and entertainment architecture. The stadium is set to be the world's first fully integrated venue with combined retractable roof, pitch and LED wall. This architectural innovation offers spades of versatility, allowing the space to transform into different event modes within hours. The LED wall serving as a portal to live event broadcasts, high-definition films and laser shows will offer guests a novel immersive experience. The stadium's design also integrates sustainable practices, including an eco-friendly cooling lake built directly under the stadium. The 45,000-seat stadium is compliant with FIFA requirements for club and international competition and will serve as the home ground for the Saudi Pro League football clubs Al Hilal and Al Nassr. It's one of the proposed venues for Saudi Arabia's 2034 FIFA World Cup bid and is expected to host major events like the Saudi King Cup and possibly the 2034 Asian Games. The stadium's cutting-edge technology like HoloBox will provide fans with virtual interactions, redefining the spectator experience. As a central venue in Qiddiya's urban entertainment district, the stadium promises an extended play experience with direct access to the city's vibrant gaming and esports district and other entertainment options. The stadium's location and design are expected to attract an estimated 7.6 million annual visits, contributing significantly to the region's tourism and economy. That takes us to the end of this week's news. I hope you enjoyed it. If you've got any questions or topics you'd like us to explore, please drop them in the comments below. Hit the like button, the notification bell or the subscribe button. Please do join our community. Until next time, take care.